Hi, hello, good evening everyone. Welcome to this course called as Complete Course of Indian Economy for your UPSC Prelims and Mains examination. So this is Nisha Nujumudeen, your educator in Unacademy. I'm an economist, teacher, entrepreneur, and I've taught 60 plus GS batches with more than 6 years of teaching experience. So today in this particular YouTube channel, we'll be discussing part-wise Indian economy syllabus for the UPSC Prelims as well as Mains perspective in a detailed manner. So today we'll be discussing Chapter 1 of Indian Economy, which highlights on the prelims perspective. Chapter 1 deals with economic growth in India, which focuses on certain key concepts like national income and all the related factors like your GDP, NNP, NTP, etc. etc. So a holistic coverage of all these topics will be covered in today's class. I hope I am audible and visible to all of you. So yes, Sandeep, good evening. Hello Naina, yes Suraj. So am I audible and visible to you people? Is everything fine? Yes, Pushparani, good evening. So yes, you can just go through my awards and recognitions. So to talk about this Indian Economy course, guys, every day 10 p.m. to 11 p.m. this free class will be conducted chapter wise. So the schedule of this particular complete course of Indian Economy, which is conducted in Unacademy Expedition YouTube channel, is also shared below the description box. So you can just go through the details and also may have an understanding as to every day what are the chapters we are discussing. Okay? Yes, Neha. So apart from that, guys, as you all know, I'm also one of the Unacademy's Plus faculty. So when if you want to go for the Unacademy Plus subscription, because there are so many unlimited benefits, and also to be a part of all the batches which is happening in Unacademy, very simple. Just keep this referral code in mind, Nisha.Nujumudeen, because you will get a discount of up to 20%. So try to make the best use of it. So these are the current Plus courses which I'm doing individually as well as in the batches. So don't miss that. Okay. So now as a part of this, Indian Economy course, as I told you, we'll be starting off with economic growth. We all know that growth and development, they are the two important parameters for our economy, right? So people may think that growth and development, they are two different perspectives. Definitely no. They are interconnected, but then they are different in their own variations. So growth is always a quantitative perspective. You can measure growth in numbers. That is why it is said that the growth of economy can be measured in GDP, in your numbers. Whereas development is a wider concept which talks about your education, health and different parameters like that. That is why it is said that your development is a quantitative plus a qualitative aspect of economy. So we are going to discuss on the economic growth perspective of what? Of economy. So in the economic growth, we are going to focus on the topics as to national income. So I hope that national income is such an amazing topic. So national income is in fact the basic of Indian economy and as far as UPSC students are concerned. And now though these concepts may appear a little technical for you people, we are going to have a complete understanding of these concepts in a very simplified manner. So in simple terms, what is national income? From the keyword national, you got to know that it's for the entire country. And income means earning. So the total income of the country, that is called as national income in very simple terms, right? So let's see the definition of national income. If you see n number of definitions by so many economists and all they have been given for national income. But I can tell you that 4 important points are very important when you study about national income. One is it is defined as the value of all final goods and services. And that too, these value of final goods and services which is produced by the citizens or let's say the normal residents of a country. And now these people, they could either be operating within our country or outside our country during a period of 1 year. So 4 important points are very important in national income. In simple terms, national income means the total income of a country, right? So similarly, when you talk about the definition of national income, make a point of having an understanding about the 4 important perspectives. One is it measures only the final value of goods and services, which means that they don't take into consideration the intermediate perspectives. Okay. The second thing is the citizens. So people may think that only the Indians, matlab if you are an Indian only, you can, that their contribution is considered in national income. That's not the case. No matter whether you are an Indian or not an Indian, as long as you are within the domestic territory or let's say the geographical boundary of your country, India, definitely their contribution is taken in the calculation of national income. The next important point is every financial year, every year we keep calculating. Why? To know the real growth of our country. So this national income is literally a quantitative perspective. In numbers you can measure that. That is why they come under the growth perspective of economy. Clear? Yes, Vartika, Priya. Hi Aarti, Jyoti, Saindi, Vikram. I hope you are all getting it. Any doubt? Okay. So this is how you define a national income in very, very simplified manner. Now, the next important topic in this first chapter of economy is why is there a need, or what is the importance, or let's say the significance of national income for our country India. There are so many factors to be understood. Why we require national income, or why we need to know about the total income of our country, is because we want to measure the size of economy, and also you should understand the level of a country's economic performance. For that you need to know what is a national income, whether they are improving or not improving over the years. Now, to understand or to trace the trend or the speed of economic growth in comparison with previous year, and also to have a global comparison in national income. How can we say that yes, our country India is in rank 6, 7, 8, 9 based on the comparison of total, or let's say national income for economy, right? For that again you need to study what national income, and apart from that to make predictions. So you may think that what this prediction is all about, that is with regard to the economic situations in future, whether we will be in a progressive state or whether our economy will be in a state of depression or recession. So for all those predictions, and to make sure that proper policies are put forward by the economist or by the policy experts and by the government, it is very, very important to have a holistic or a complete study of what? Of your national income. Clear? Very fine, guys. And again, there is something called as developmental targets for every department. Your production department, consumption department, your agriculture department, different departments. So now to fix the targets, how much you'll be able to achieve in each departments, and also the different sectors of economy, your primary, secondary, tertiary, that is agriculture, industry, service sector, whether you are able to achieve the proper targets of so and so growth. For all these things, this national income is very, very important, and also to help the business firms and to make an international comparison of the people's living standard. This is a very important point, that is to know how far the living standard of the people have improved. So for all these factors, literally you need what? You need national income. So these are the quick, important, or the simple points I can tell you for you to have an understanding why you are studying national income. See guys, when you study a topic, it's not about mugging up the concepts. It is all about understanding what the concept is all about and why you are studying that. There should be a reason for that, right? So this is the practicality of studying or knowing the importance of national income for an economy like India. Not only for India, of course, for the entire economies. Okay? Yes, Bijoy. Yes, Sahil. All clear? Perfect. Yes, Sandeep. So today for the 6 p.m. I missed you all, but I'm so happy to see my crowd back in the YouTube today for the live. So I hope you're all getting the concepts as well in a very crystal clear manner. Now, we studied about national income, we spoke about the importance or need. But now it is also interesting to know regarding some important point as to how this concept of national income, or let's say total income, evolved over the years. So the next topic of discussion is the evolution of national income accounting in our country India. So before going for our country India, do you think it is an Indian who literally brought this concept? Definitely no. Let's get back to the global scenario. So globally, if you see, way back in the year 17th century, there was a person called as Sir William Petty of England. Okay, he is considered to be the first person to make a known estimate at the global level with regard to national income. So since 1665, you have the calculation of what? National income. So now keeping that in mind, the Indian leaders or our Indian reformers, I can tell you, they got this idea. And the grand old man of India, none other than Dadabhai Naoroji, he is the one in the year 1886 who mentioned about the estimation of national income. And that too in his very, very famous book called as Poverty and Un-British Rule in India. So this is how the concept of national income evolved in our country India. From a global perspective, from Sir William Petty, again, Dadabhai Naoroji took the idea and that is how we evolved it. Clear? So that is a really good, information to know as well, right? Now, before going to the next topic, guys, regarding this, national income before independence and after independence, because we all know that Dadabhai Naoroji, when he introduced this concept of national income in India, it was before independence, because the year 86 itself denotes that. So what was the condition, or let's say how was national income estimated before independence? Very simple. No specific amendments, or let's say no specific changes were made. What they did is like, they went for a very normal calculation. Since the first attempt is made by Radhavan Aruchi, what did he do? He said that the per capita income, the per capita income will be rupees 20 per annum. This is how he estimated. So after him, so many other people like William Digby, then Findlay Shiraz, then Kamta, VKRV Rao, and also R.C. Desai. All these people, they came with the estimates. So R.C. Desai and all, if you see in the year 1931 to 40, he made a lot of estimates. They kept on revising. But though these people kept on bringing lot of new techniques and methods of calculating or estimating national income also, somewhere or the other, they felt okay, they were lacking in some perspective, because all these people, before independence, when they calculated national income, what happened? Automatically, they missed out on some sectors. What is national income, guys? In simple terms, primary plus secondary plus tertiary sector, that is equal to national income, right? So now what happened was like all these people, starting from Dadabhai Naoroji to your William Digby, Findlay Shiraz, VKRV Rao and R.C. Desai, they really did a very good calculation. But now they, according to them, they calculated, or let's say they estimated national income, based on the value of output only from the agriculture sector, which is the primary sector of the economy. But what about the other sectors? We have industry as well as tertiary sector. They did not include it. They actually did a guesswork. So a factor of guesswork was brought in there. So what happened? Automatically the calculations or the figures were literally wrong. So this was the biggest or the major drawback of estimation of national income before independence. So now, taking into consideration all these perspectives, what happened after independence? Come on, a very good, in fact, I can tell you, a very refined structure of national income was brought in, because there were so many disadvantages before independence, right, in the calculation. So after independence, I can tell you, in August 1949, the government of India, what did they do? They appointed a committee called as National Income Committee. Now, this committee appointed Mr. Professor P.C. Mahalanobis. You would have heard about him when you studied planning. Professor P.C. Mahalanobis as what? As the chairman. And the other two members of this National Income Committee put forward by Government of India after independence included Professor D.R. Gadgil. You can just note it, D.R. Gadgil, and also Professor VKRV Rao. This VKRV Rao, he was also there before independence and after independence in the estimation. So he had some experience during both the times. So he was a better critic, I can tell you, in analyzing the faults or the drawbacks in the estimation before independence. So these were the members of the new National Income Committee constituted after independence. And thus, what is the job? The main job of the committee is very simple. They had to estimate or they had to analyze national income, guys, based on some factors or parameters. Take care. And thus, these people, the National Committee headed by Professor P.C. Mahalanobis, they prepared the first report, in the year 1951. That is what is the income of the country and all. Though they prepared the report in the year 51 also, again, there was some sort of, disadvantages and all. They couldn't approve it. So, the final report was prepared and published in the year 1954. So, though the first report was submitted to the committee, National Committee in the year 51 also, it was finally approved in the year 1954. And thus, this year 1954 is considered to be as what? The landmark in the history of our country, India, because it is for the very, very first time, I can tell you, we were able to provide a very comprehensive or a holistic data regarding the national income for the entire country, India, because all these sectors have to be taken into consideration equally. You understand? So this is the whole point regarding national income. And thus, whom do you think, guys, is the agency or organization for estimating national income? Is it NSSO or is it some other organization? Definitely no. Very simple. The government established an organization called as CSO. What is that? Central Statistical Organization, who literally estimates or calculates what? Your national income in India. And even today, guys, it is your Central Statistical Organization or CSO which regularly publishes the data based on national income. So this is the history of national income, guys. I hope all those who are attending the economy national income class for the very first time, you would have got a complete understanding as to the meaning, the need of national income and how this concept evolved. The reason why I told you this is because it is very important, guys, to know regarding the base of some concepts. So you will not forget it. You understand? And you'll understand as well. Yes, Shankar, all fine? Yes, Priya, perfect. So now, talking about the next concept, we are going to see about some aggregates of national income. That is, before going to the indicators now, there is something called as factor, cost and market price. You would have heard about this. So quickly I'll tell you what these concepts are. So now, the value of a product, the value of the total product that is produced may be calculated either at two costs. One is called as factor cost or factor price, or factory price, another is called as market cost or market price. So you need to understand what these costs is all about. That is the amount which is paid to the factors of production guys for their contribution in the production process. That is called as factor cost. Let me make it more simple to you. In simple terms, factor cost is nothing but it is the input cost, or let's say the producer cost, because the cost of raw materials, the cost of electricity, the cost of paying rent, all these are the costs incurred by the producer. That is called as factor cost or factory price or input cost or producer cost in simple term. When you study your GDP, which are the indicators of national income, you would have seen like GDP at factor cost, GDP at market price, right? So you should understand what is this factor cost and market price to connect them properly. Clear? Now, thus I can tell you factor cost or factory price. What is that? It is the price from the side of the producer, because the producer is incurring. For example, if I am a producer, literally the price that I am incurring, you understand? For example, I'm engaged in making a shoe, okay, so I'm from the owner of the shoe factory, so now the raw materials required for shoe, the leather is required, then the payment made to the laborers, all these are called as my factor cost or input cost. Clear? So factor cost is from the point of view of the producer. So what about market price? The opposite, guys. If factor cost or factor price is from producer's point of view, obviously the market price, that will be from whom, guys? From the point of view of the customers. That is, it refers to the price at which a product is actually sold in the market. For example, again, I am a shoe producer. So at the factory price of a shoe will be, let's say, 100 rupees. But now from me, a wholesaler is taking the product. From the wholesaler, again, another middleman takes to a retailer. From the retailer, it reaches to the outlets, and from the outlet, it goes to the customers. So look at the process, guys. Directly from the factory, no customer is purchasing. There is a middleman involved, right? Like wholesalers and retailers. So now they will add up their profit. Plus, they have to pay taxes also. So thus, the price at which the product is finally sold in the market, which is purchased by consumer, is called as market price. This 100 rupees ka shoe at the factory price will be sold for, let's say, 250 rupees in the market, and that is called as market price. The difference between these two is the net indirect taxes, which is included in your market price and excluded from the FC, because factory price does not take into consideration indirect tax. These days you have something called as GST, right? Goods and service tax. So that is what the whole point is all about. Clear? So when you include indirect tax and when the value of the product increases, that is called as what? That is called as your market price. Clear? And now what is this net indirect taxes? Indirect tax we know. That is your GST. But what is net indirect? The difference between indirect tax and subsidies. Please note this point, it is very important, it's a key word. So that is defined as what? Your net or your final indirect taxes. Clear? Sahil, in NCERT books you don't find national income directly, but then after understanding the basics from class 9, 10, 11, 12, you can come to the main portions and study. There are so many books available in the market for studying these concepts, but this video itself will enable you to have a complete understanding. So when you get back to some books for revision, you will understand the concepts better. Okay? Perfectly fine, guys. Now, you can just go through the formulas and all, it's not that important, but still. Your market price is what? Your factor cost plus net indirect taxes minus subsidies. Whereas your factor cost is what? Market price minus net indirect taxes, because they don't take into consideration the taxes. Clear? I hope the example of shoes will literally help you a lot. Ramya, this is a topic from NCERT in the sense that detailing, that is class 12th. In class 12th book, they'll explain about this. But I am recommending you to go through this video because these are condensed form. I have not given you too many, big paragraph wise. Very condensely, I have kind of given you. So it is very handy. The notes are very handy for you people. That is why. Take care. You can even read that. Very fine. No problem at all. Even I am doing a plus course, guys, at 4 p.m. to 5 p.m. on Unacademy platform on Economy NCERT course, complete course. Today I completed chapter 9, the complete 4 chapters in one class, chapter wise. So those who want to go for subscription, in every slide you can see a referral code, right? Nisha Nujumudeen. You can just go with that itself. Clear? Okay. So now this is the most important part of national income, guys, because here we're going to deal about the concepts of national income. So the important indicators, let's say concept of national income, it includes GDP, gross domestic product, then GNP, then NDP, NNP, personal income, disposable income. So whenever you study national income, these concepts highly tend to be a little confusing. But let me tell you guys, though these concepts are confusing also, if you get a right strategy and practically if you're able to connect it, you can just fatafat, study the concepts as well. So now the first concept is GDP. What is GDP? Gross domestic product. Before going to the definition, okay, let me show you the definition, then I'll tell you. What is the definition? Again, the money value of all final goods and services produced in the domestic territory of a country during an accounting year. Take care. Now, I am going to give an example to you. You have the primary sector, you have the secondary sector, you have the tertiary sector. So now, for example, let's go back to 5,000 years ago, not 5,000, let's go to let's say at least 100 years ago. Now, primary means agriculture. The farmers, they produce onions, tomatoes, potatoes and all, and when they sold, their for tomato, onions, potato and all, the price output or the price that they got was, let's say, 50 rupees. Okay. Now, this onions, tomato, and potato, they are going to the industry now. You can have onion pakoda, you can have tomato ketchup, you can have, potato chips, whatever, in the packaged food items. So now, the profit they earned is, let's say, 150 rupees. Now, the industry is producing that, secondary sector. This has to be transported to the proper markets or the distribution places. You need proper transportation, insurance, banking, all of the stuffs. You need people, laborers and all for that. All these comes under tertiary sector. So now when they sold, the profit they got was, let's say, 200. So now in simple terms, GDP is what? GDP is primary plus secondary plus tertiary sector. So 50 plus 150 is what? 200. 200 plus 200 is 400. This is actually your GDP in very, very simple terms. Now you read the definition, guys. It will make a lot of sense for you people. It is the final value of goods and services. Very true, right? Though you produce a tomato, onion or whatever, it comes to industry. Then it comes to a service sector. Totally it is 400. So it is the final value of what? Goods and service from all the sectors. And within the country, whatever has been produced, and again during one particular year. And this accounting year is April 1st to 31st March. Clear? And now there is something called as final and intermediate good. For example, the packaged food items, what you get in your hands, they are called as final products. Intermediate means semi-finished goods, goods which are yet to be finished. They are semi-processed. Clear? So, but GDP takes into consideration only the final goods. Clear? And services. Acha, I can see people telling me Uncle Chips and all the other chips. So smart you people are. I know. When I tell about potato, onion, tomatoes and all, people are so worried about, so excited about chips and pakodas and all. Come on guys, no chips and pakodas for you people. Yes, Sandeep. Anyways. Now, this is a formula for GDP. C plus GI plus G plus X minus M. Very simple. C stands for consumption expenditure. Then GI is government investment by firms. Again, the G is government expenditure. And X is minus M is what? X stands for export and M stands for import. The value of export and import, guys, the difference is called as X minus M. Clear? This is not that important, the formula. You will not get questions based on formula as such, but you will get questions based on the concepts. That is based on GDP concept and also based on the current affairs perspective of GDP. Where I do a lot of free classes for you at 6 p.m. Guys, I keep telling you, right? When we discuss economic questions, I also keep telling you regarding that. Now, you may think that all the value of all the value of all the final goods and services. So, you may think that every goods and service produced in an economy is included in GDP. That is not the case. If you see, GDP doesn't take into consideration the entire value of goods and services, guys. Only that is legally permitted. For example, there are some activities which are not included in GDP. That is very, very important to know as well, because people tend to get confused regarding this keyword called as final goods and services. You understand? That means people, no matter if they do some illegal drug trafficking, they do some kind of corruption, kallatharam and all, they think it will be included. No, that is not the case. Though it talks about the final value of goods and service also, there are some activities that are not included in GDP. What are they? Again, unfinished goods, because they include intermediate goods, and it leads to double counting. And also GDP doesn't take into consideration any sort of illegal activity. What are illegal activity? The bada level kallatram, matlab the high level ka corruption activities like your drugs, murder for hire, people hire some people for murder and all this stuff, then paying payment for goons or gunda ka people. All these will not include whatever payment they are getting, because these payments are not via transactions. They come under the black market, or they come under the trades, guys. Okay, that is why they do not come under the calculation of GDP. Apart from that, the gifts, whatever gift is being given, can we consider gift as coming under GDP? No, it is a gift. It's a kind of aid given. And also the household works. That is, for example, the household works done by our parents, our the maids or domestic help we have. All these are not at all included in your gross domestic product. Clear? So kindly note this. And one more important thing is that, for example, a car is produced. Okay, 2019 when car is produced. Okay. Now the price of car is 5 lakhs rupees. Now in the year 2019, the cost of this or the value of this final good will be included for your GDP calculation. But in 2020, if I am buying this car from my friend, she is selling it to me, let's say, for 2 lakhs or 2.5 lakhs. So now in that case, what happens? In that case, it is like after sales. So now only for 1 year the production cost of the car will be included. That is in 2019. In 2020 they won't include that, but they will include something called as like second hand sales services. That is, they do not include second hand sales at all. It has been excluded from your GDP because no production is involved in that second sales. You understand? Except for the sales service. Whatever is produced in one particular year, production should take place. Only in that you will include. For example, in 2019 and 20, if I am including the value of car, what happens? 2 times it has been added. It leads to double counting. Double counting means what? More than 1 time the value is added, which gives to wrong data or estimation of what? Estimation of national income. Clear? Oh my God, Mera young officers, students are so much happy in giving a lot of comments. I feel Sarnash is saying economy is the what is it? No, Sandeep is saying polity is the guardian of economy and economy is the guardian of society. Kya baat hai? Arey, that's amazing. Sarnash is saying economy is the brother of political ideology, not the father. Oh my God. People are developing their own ideologies. Great to know that, guys. It's true. In a way, it is true. So very clear up till here. Any doubt? Perfect. Chalo. Now, we studied about factor cost and market price, right? That is the producer's cost and the customer's cost. So now your GDP, they can be estimated or calculated at factor cost from the factory's point of view and also at the market price where indirect taxes are involved. So you can just go through that. So all these things I told you regarding factor cost and market price, the same thing you can just go through. And factor cost is also called as what the different names is, producer's cost, input cost, etc. And market price is called as ex-factory price because they do consider your indirect taxes that is involved in that. Now regarding market price and factor cost, guys, let me tell you something. Factor cost means the sum total of the earnings made by the factors of production. What are the factors of production? In the very first chapter of economy NCERT, the story village of Palampur, I have told you when I taught you that right in the plus class, I think. Land, labor, capital, entrepreneur. These are the factors of production. What is the income they earn? The income that the factors of production get is, for land they get revenue, for the land they get rent, for labor they get wage salary, for capital the income they get is interest, and for entrepreneur the income that they get is what? Profit. So now that is how your GDP at factor cost is estimated. Now GDP at market price means the gross market value of the final goods and services, again which is produced within the domestic territory of a country during one particular year, and that too by the entire production units. Whether you study GDP at factor cost, market price, or you study GNP or NNP, etc., 3 things are always the similar: final goods and service, domestic territory, accounting year, that is 1 year. These are the common keywords inclusive of all the definitions of the indicators of national income, be it GDP, NDP, NNP, etc. Clear? And what is this market price in GDP, guys? Market price in GDP means the indirect taxes, like your sales tax, sales duty, all these things comes under GST, right? They are included. And the subsidies, that is the for welfare government give you some subsidies now. So they are excluded. That is the meaning of GDP market price. They shows that the net indirect taxes, that is indirect tax minus subsidy, they have been included. Clear? Because subsidies are completely excluded. That is the meaning of GDP at market price in simple terms. Again, factor cost. Factor cost, I told you what it is, right? GDP at factor cost is what? GDP at market price minus net indirect taxes. They do not take into consideration your net indirect taxes. That is indirect tax minus subsidies. That is the whole point. They exclude that. Once you exclude that, it becomes your GDP at factor cost. Once you include that, it becomes the GDP at market price. Very simple, guys. GDP at factor cost and market prices. Market price will include your net indirect taxes. That is, the indirect taxes are included and subsidies are excluded, minus. Whereas at factor cost, the opposite. If market price is including means factor cost, what they do? They actually exclude it. ठीक है? नहीं सुनो ना class work करना. मुड़चुड़े. Clear? Next, you have gross national product. So now, before going to know gross national product, you need to understand of market price of factor cost. You need to understand what that is all about. So now, gross national product in simple terms means the value of all the final goods and services, guys, produced by the nationals of a country during 1 year. I repeat, by the nationals of a country in 1 year. Now, it measures only the value of goods, okay, which has been produced, which is produced by whom? By the country's citizens, regardless of their location. The meaning of that is, no matter, see, I'm an Indian, now I'm having my job in US or Japan, so I'm working in Japan. No matter wherever I'm put up, as long as I'm a citizen of India, definitely in the gross national product, my contribution is taken into consideration. Did you understand? That is the simple meaning of gross national product. Thus, your GNP is what? Your GDP. GNP is equal to your GDP plus what? GDP plus the net income from abroad, NYA. Y stands for income in economics. Net income from abroad means the income that you earn. So definitely, I'll be sending the money. If we are working abroad, means we'll be sending our money to our homeland as well, right? To our parents and family. Same thing. So no matter wherever you are located, as long as Indian citizen, your contribution is definitely taken into consideration at your GNP. Clear? Just like your GDP, your GNP is also classified into market price and factor cost. So you can just go through. So thus the income of all the residents and the non-residents, that is NRIs of a country, as long as the citizens of India, is included in what? In your GNP. Clear? So again, the difference of GNP, that is gross national product, at market price and at factor cost is what, guys? Market price means again the net factor from abroad, that is your NY, that is included in market price and GNP. In factor cost, they will minus or does not include the net indirect taxes. Subsidies and all, they won't take into consideration. That is the whole point. The next one, that is enough, guys, in this concept. The next concept is NDP, Net Domestic Product at Market Price. What is that net domestic product? See, GDP, NDP we have done. Sorry, GDP, GNP we have done. Gross domestic product we have done, and gross national product we have done. GDP, GNP. The next factor is your NDP, that is net domestic product. What is that, guys? Come on, quickly tell me, what is NDP? It is the GDP. In simple terms, NDP is what? Your gross domestic product, which is calculated after adjusting depreciation. What is depreciation? Depreciation in simple terms means wear and tear of a machinery. For example, I bought a washing machine worth let's say 40,000. After let's say 1 or 2 months, suddenly some repair is happening. Motor has gone, some repair has happened. I am paying extra 10,000. So the real value is 40,000. But now I am additionally paying 10,000 for the repairs and maintenance. So that is called as depreciation, the wear and tear of a machinery. You understand? So now your NDP in simple terms is the GDP, that is calculated after adjusting what? The weight of the value of depreciation. Clear? Rainy konja call panna. I'll be reaching in some time, you say. Very clear, guys? Look at the question asked by Sarnesh, guys. What an amazing question. Ma'am, if a criminal takes contract to kill someone in foreign country, he is Indian citizen and he transferred in India, then it would be included in GNP or not? Come on. Such kind of questions I never expected. Take care. Seriously, I never expected. You are thinking in such kind of perspective, guys. See, at the end of the day, corruption is there. Shoot aramisha. Producer has come. I'll wind up now and I'll go. I'm coming along the way. I'll wind up now. Very clear, guys? the next important indicator is net national product, which is technically called as national income. So now out of the indicators GDP, GNP, NDP, NNP, the final is your NNP, net national product. So now if you know the definition of national income, that is the meaning of it. Technically national income is called as NNP. NNP at market price is called as what? As national income. The same definition what you literally saw for national income is for your NNP as well. So these are the simple concepts of national income, guys. Matlab the indicators starting from your GDP and ending in your NNP, that is net national product. Very clear? Any doubt? See, we are doing a quick revision as well, guys. Through this, even for the prelims, you should be all ready, with the revision perspective, because all these things you have been learning for a very long time. Now, there is something called as constant and current price. What are they? Now, you would have heard now, national income at constant price. Matlab base prices. You would have all heard in current affairs. Base price is what? The current base price is 2011-12. So now, if national income is calculated, guys, on the basis of a base year price index, it is called as national income at constant price. It is also called as real national income. Why? Because it keeps fluctuating, because of the fluctuations in the entire flow of goods and services. And at that time, your price will remain constant or stable. That is why it is called as constant price. From the keyword constant, you understand it is stable. It is to prevent inflation, because every year inflation keeps coming, right? Today it will be 4%, tomorrow it will be 5%. So fluctuations is difficult for you to adjust. That is why the expert economist has come up with the concept called as constant price or base year. So such kind of things can be adjusted. Clear? And what is national income current price? Current price means the current market price what is there. Matlab, for example, 2020, if you want to measure national income, means based on 2020 prices you will calculate. But normally it is advisable to measure national income on the base price or the constant price. They will fix one particular year. Based on that year's prices, you will start analyzing or estimating for the safety perspective and to avoid the fluctuations that is happening in the national income. That is why it is always said that national income and constant price is also called as real national income. Clear? And that is comparatively better compared to the current price, because current price includes inflation and a lot of fluctuations takes place along with the price of commodity. Today the price can be 50 rupees, tomorrow it could be 30 rupees, it could decrease, and day after it could be 100 rupees. So you will not get a proper estimation. You got it? So these are simple stuff. So Rathod, fluctuated means keep changing. There is no stability. So that is why the constant price or the base price is highly recommended. So as per the current affairs perspective, it was said that 2020-21 should be the new base year. But still recommendations and meet committee has been put forward for that. But as of now, since it is not implemented, the base year is 2011-12. Clear? Please note that point as well, guys. Very, very important from the current affairs perspective. Now there is something called as personal income. What is that? Very simple, guys. Do not worry, just because I gave you so many information in the slide, do not worry. Very simply, I'll tell you in 2 lines. You and me, we all work. For example, when you get an income, that is called as personal income in very simple terms. That is the income received by the individuals or the households, guys, in a country during a particular year is called as personal income. If your income is, let's say, 1 lakh. Okay. Now, that is actually called as your personal income. That is your wages, profit, interest, rent, all the sources from where you get income is called as personal income. And now the transfer payments. What are transfer payments? Transfer payments means unilateral transfers, like your unemployment allowances, your pensions, your relief payments, social welfare schemes payments, all these are transfer payments. That is also included what? In your personal income. Now, once you know the personal income, there is something called as disposable personal income. So you know what is personal income, the total income received by individual or household. From that income, for example, 1 lakh is your income, means from 1 lakh you have to pay your taxes, you have to pay the fees, fines, penalties, all the other household expenditure. What remains in your hand? That is called as disposable income. That is, it is a part of personal income, okay, which is remaining in your hand after spending for all the purposes you need it. That is the part of personal income that is actually available by the individuals and the households for the actual consumption and saving is called as disposable personal income. Clear? And for example, 1 lakh a person is receiving means he or she can spend that income at their discretion after all the payments is made. Clear? That is, for example, if you're getting 1 lakh, you have to pay something called as direct tax. So, like income taxes, then education tax, etc., etc. So, whatever money remains after that, for example, let's say after all the expenses, 50,000 remains in your hand. That is called as the disposable personal income. Clear? And thus your personal disposable income or PDI, guys. What is the formula for that? It is very easy. Personal income minus personal direct taxes like your fees, fines, penalties, etc., etc. And now there is a lot of impact on this because the effect of disposable income, okay, they can be seen in the GDP of a nation because fluctuations occurring in the disposable income that will result in having a big impact in the entire gross domestic product growth of a country. Clear? Yes. Ramya is saying after spending nothing in our hand, it is always like that. The moment when salary comes for you people, I will be very happy. Acha, I got my salary. But after 1 week now, our faces become so dull because nothing in our pocket. Our pocket khali hai because all the expenses, that dues, this dues, that loan, that's all. The josh of seeing the salary na, it vanishes like anything. But it's good. At least you're learning how to balance your budget and all, right? Anyways, so that's all. Now, there are some 2 more concepts to be covered, guys. One is called as GNP Deflator. One is green GNP. These are also included in your national income chapter. What is GNP Deflator? Deflator means something that reduces. So now that measures the average level of prices of all the final goods and services, guys, which is again produced within the domestic territory of a country. And this deflator is nothing but it is the ratio of nominal GNP to real GNP multiplied by 100. It's very simple, nothing much. This is what the GNP deflator is all about. So what is green GP? From green, the term green, it is based on environment, right? So green GNP means the gross national product adjusted for loss of value because of some issues like environmental degradation and also depletion of natural resources and all. You understand? That is called as green GNP in very, very simple terms, based on environment, guys. From the term green, you understand it is based on environment. Clear? Manchita, GVA means gross value added. That is also like GDP only. GDP takes into consideration what? The value of final goods and services the entire economy is producing. Whereas GVA means they take into consideration the value of all the final goods and services. But now they focuses on the sector wise. The final value of goods and services on agriculture sector or on one particular industry or on one particular area. Very specific there. That is called as gross value added in simple terms. Clear? GVA is equal to your output minus materials inputs, which includes your intermediate consumption as well. Is it clear? Very fine. So that's all, guys. All these are for your understanding. What are the disadvantages of using GDP as an index of welfare? All these are for your understanding. I just gave it. But these are the important things that you should understand. Apart from that, 3 more things are very important. One is the method of calculating national income. There are 3 methods. Income method, production method, expenditure method. Out of this, what is important is your production and income method. Okay. So one second, I'll just tell you quickly about that. That is also very simple. What is income method? Product method means the value of goods and services which is produced in a country during one particular year. Okay. And the total obtained value, whatever value obtained, that is called as final product. And that is called as your production method, product method. And now, the next talks about income method. Income method means again the income earned by the working people in different sectors and commercial sectors. So now when you obtain that, that is called as your income method. For example, it aggregates or takes into consideration only those residents of a nation, matlab who are staying in a country, the corporates or individuals, and who is getting the income directly from the current production of goods and services. That is how your income method has been calculated for national income. So now all these methods are not that important detailing, but out of this the question for UPSC Prelims can only come from 2 perspectives. That is, which of these methods are important for national income? Is it income, production or expenditure? Based on that only you will get questions. Okay? So I can tell you that in our country India, a combination of product and income method that is highly used for calculating national income. I repeat, income plus product method. You can't say one method for our country India, because we are a mixed economy. So income plus production is the important method. Based on this only you will get questions. So in this particular topic, this is the only single line, or let's say 2 to 3 statements you need to keep in mind for UPSC examination. Apart from that, you can just go through for your understanding. See, I am teaching you the most important hit list topics because you will be able to give more stress or focus based on that. Take care. Clear? Did you understand, guys? Because learning everything under the earth and sun is not recommended for UPSC, because you have to be very selective and you should know how to study, guys. That is more important. So that is why I adopted this method of teaching you even the basics. So I hope this national income class is really giving you insights into as to what is all about and a clear-cut understanding of brushing up your basics as well. So thank you so much and see you all tomorrow Pakka at 10 PM for the same chapter 2, guys. of economy course which deals with the indices, the development indices. The PDF of my schedule is shared via Telegram channel as well. Please go through, and if you like the video, don't forget to share it and subscribe this channel, Expedition channel, and also please put forward your valuable feedbacks via the comment box. Whatever queries, suggestions you have, do put it in the comment box, and whatever doubts you have also, please do it. I will definitely clear it as and when I see that. Clear? So yes, did you all understand, guys? Yes, Priya, for mains also you can use it. Very, very useful it is. I hope you really enjoyed the classes, guys. Thank you so much, my young officers. See you all, and don't forget to put forward your feedbacks. So that's all for today. Bye-bye, and tomorrow the plus students, all of you come at 11 a.m. You have a plus class. Then today 6 p.m. class is rescheduled at 2 p.m. The free class. So all of you do come for the class as well. I hope you really enjoyed the video. Thank you so much, guys. Bye-bye. Take care. Jai Hind.